Well, actually, in our opinion, it makes some sense. This is a firm, along with its peers, such as Uber, that is dependent on a network effect competitive advantage. So they need to basically strengthen that network effect, and the way to do that is consolidation. And on top of that, I mean, as you would expect, growth rate is going to decelerate post-pandemic. So they needed to actually expand in additional areas. So in our opinion, from a strategic standpoint, the acquisition does make sense.
I get $8.1 billion, so it's a big deal for them. Any sense of the price?
Not yet, but that's probably what you would expect in terms of the size of the deal, mainly because there are actually a few pretty large players out there, especially in Europe. Certainly Uber Eats is one, Just Eat Takeaway is another. So, in order to compete more effectively with them, and as I mentioned before, in order to strengthen that network effect out in other areas, some larger acquisitions are necessary. And as you know, I mean, in this space overall, consolidation is expected. Of course, as you probably remember, DoorDash did acquire Caviar, Uber Eats, took Postmates, and of course, Just Eat Takeaway out there from Europe. They came in and grabbed Grubhub. So these types of M&A activities are necessary in this space in order to maintain your market leadership or market position.
What about the quarter itself, Ali?
The quarter was actually pretty impressive. They beat on the top and bottom line. The take rates improved slightly. I think the adjusted EBITDA margin was pretty good. They continue to see increase in frequency, the number of orders and so forth. So all of it actually looked pretty positive for this company.
Ali, thanks for joining us. Good to see you.